Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Friends, in this video, we're going to talk on the topic choosing the right product. Today, millions of investors are investing in equity and debt via products. The product could be a simple ETF or an index fund or an actively managed equity fund. It could even be a debt fund, a liquid fund, or it could be hybrid products which have both debt and equity. It could be a multi-asset fund which could have exposure to more than equity and debt. It could have gold and other things also. And it could also be more sophisticated products like a PMS or an AIF. So, the product ecosystem in India is getting more and more robust. The choices are more and more wider, and with such increasing choice, when you are spoiled for choice, you are also struggling to choose. So, investors now have a happy problem, lot of variety, but difficulty in picking. So, what is the immediate tendency? The immediate tendency is to try and simplify choices. If you see what people who are financial influencers try to do with you is to tell you, look, I'll make it simple. And when somebody says, look, I'll make it simple, it's natural to be tempted to follow that approach. And a lot of people have been doing that as well. But not everything can be made simple. Product investing is there for a purpose. What is that purpose? It is to serve needs wide ranging from elementary to simple to highly sophisticated. So, in between you have a lot of complicated options as well. So, when you move towards that end of the spectrum where sophistication and complication come into play, then your choices cannot be made just the same way you buy a simple index fund. So, that's where I think people are still grappling with how to make these choices sensibly. But here again, I think those who choose to restrict their product universe to very simple products are better off. I saw a piece where somebody had talked about going to 10 crores in a little over 2 decades by doing just SIPs in mutual funds. Now, that is how an investor achieves his outcome. Stick to something which you understand, do it consistently, do it sensibly, avoid making mistakes in that journey and stay longer. So, by doing that, using the right products, you are able to go to a higher goal. My experience in products is on both sides. On the one side, I evaluate products. I do research on mutual funds. On the other side, I have curated products. So, I have also created products. So, I have nearly 5 products to my credit. When you create a product, you are thinking about who the product is for. But when you evaluate a product, you are first evaluating if the product is well made and then seeing whether it suits the requirement of people. There is also an additional layer in this evaluation process where you have found a product to be good, you know it can serve specific needs, then you fit it with who can use that product. So, you identify beneficiaries and create the right fitment. That is also part of my professional work. Now, as an individual investor, can somebody do this? If he spends a lot of time, if he is committed to learning, he probably can. But is it possible to do the same thing just by some scattered reading, some superficial research? The answer is no. I had a number of arguments with those who are sell side professionals in this trade as early as a decade ago. Their argument was to simplify, and their argument was also oriented towards products which give good intermediate yields, intermediary yields. That is, the person who is the distributor tends to make good money. Now, to my mind, that cannot be a sensible approach. You should go purely on the merit of the product, and whatever you do in the investment world has to be on product merit. So, these arguments would always be trying to scare the other side and then telling them what I am telling is the best thing. Now, I don't subscribe to this kind of narratives, but there are enough narratives to this day, because when you say I will simplify it for you, you are moving people away from sophistication and complexity. Many people prefer that, and I would leave it to their choice. But to my mind, this market offers so much of sophistication and complexity so that we make use of it. If you have a choice of going from Chennai to Madurai in a Maruti Omni, and you also have a choice of going in a super deluxe Volvo bus, I would definitely choose the latter. I would not choose to go in a Maruti Omni. So, I feel that simple products are just there for people who want such choices. But somebody who is coming up in life, somebody who is highly aspirational in how he lives, who is aspirational in his career, whose aspiration is always growing for his family, whose lifestyle aspirations are continuously expanding, such a person should not lower his investment aspirations. He must make use of whatever is available and get the best value out of that. Here again, I feel that an investor should not get confused by what you pay as cost to the asset management company or to the intermediary. I'll give you an example. Now, I go and invest outside India under the LRS. Every year, I invest outside India. Now, in this, there are a lot of platforms which claim to do good work. But since I invest a significant sum of money, I want safety, I want security, I want to function only with the bank. I don't want to go with an app. So, an app is out. I don't deal with any app. Then, I go with somebody who gives me the right research. Also, I want to ensure that my investments are safe, that I have other facilities with the bank which also help me. So, the choice means that I pay a little more for my transactions. But look at my overall sense of security. I am dealing with the right entity. I am dealing with an entity which will protect my interest. I am dealing with an entity in which my assets are safe. And I am dealing with an entity which also gives me additional privileges. So, to me, there the cost is not the driver, but the overall experience is the driver. When a person comes up in life, he must choose whether he is simply a cost warrior or he deserves better experience. And when you choose products, I think this also should weigh on your mind. Many people actually end up paying high cost through their intermediaries, which could most likely be a bank or private wealth. And in the process, they are still not getting the experience which they feel they should. In that case, you need to move to people with better products. You need to get to a place where the product knowledge is way superior and they are still able to give you a better experience. So, your choices actually have to migrate towards what you expect. You cannot keep your choices sophisticated and the place you are operating very primitive. So, you need to operate at the right place where what you want can be easily delivered. So, that is something which I think a lot of people have to learn. Not only to choose, but also to review, evaluate and sustain, because many people make wrong choices in who they deal with and how they deal with, and then after allowing those choices to run for some time, when they see failure, they simply pull back and then go to something simplistic, denying themselves the opportunity to a sophisticated and complex investment strategy which could deliver superior returns. So, there are so many thematic funds which I have bought in my 12-13 years as an intermediary, both personally and professionally, and all of these have delivered better than the so-called simplified products. So, these are choices. There is no one way, but when you make better choices which are more sophisticated and succeed with them, you compound your money, and that essentially is the crux of what you choose. And that choice is before you. If you choose to go on a path which you control better, but which has adequate sophistication and complexity, and you ace it on that path, your journey is going to take you faster to your destination. Thank you for watching this video.